Good morning, traders. Christian Kerr, Senior Market Strategist, dailyfx.com. This is my recap for my price and time piece of July 24th, 2014. So today I look at dollar yen, Kiwi, and Euro USD. As for dollar yen, story stays the same. We have some nice cyclical relationships hitting around this time, but I need to see 102.25 to get on the upside to get more excited about the start of a more serious advance in dollar yen. On the downside, I really don't want to see 101.05 taken out, and of course, 170 could lead if that was taken out to a more serious decline. But those are kind of the levels I'm looking at in dollar yen. In the Kiwi, we had a big move overnight. We've fallen. We fell sharply on the RBNZ's decision to halt the rate hike cycle. For me, I've got key levels coming up. I don't particularly like fading this move. I'll actually pull the chart up. That's the euro. So in the Kiwi chart, you'll see, I've been talking about kind of looking for a move into into end of next week, kind of to where I could is my idealized time for us to put in some sort of lows. I'm generally negative on the exchange rate until then. Kind of my first level of resistance comes in right around 86.50. And then if 87.20 were to be overcome, that would be very bullish development. But until then, the path of least resistance looks to be lower. I'm kind of looking for a general move down next week. There's a minor turn window tomorrow and then Tuesday, so just keep an eye out for those. But generally, while below 86.45, I keep a negative bias on it. In the euro, this was my focus chart of the day. And I just basically talk about the possibility that we get maybe a recovery attempt with month end on the horizon. My reasoning for this is partly from a price standpoint. I've talked about a lot about this 34.60 to 35.10 zone. Big long-term confluence. We've not been able to close below it. Yesterday we closed at 34.60. So we're kind of struggling to close below it, and I've got a bunch of timing cycles, both short-term and medium-term, kind of pointing, kind of hitting now. So that would favor some sort of reversal attempt. I'll actually show you the one on the euro. This is kind of an interesting one. It's I tweeted it out last week, but basically, if you just take the 2,618 relationship in time of the 2011-2012 range, you'll see it's hitting right about now. So I think with us making new lows into it, and our inability to get through that support zone, kind of favors at least a recovery attempt. For me, I would need to see kind of these levels breach right around 35.20 to suggest that we have any sort of more meaningful move starting higher than just a recovery attempt. Once again, if we can close below 34.60 for at least a day, ideally more than that, I think that would confirm that we do have kind of a broader move starting at the downside, and that would invalidate a lot of this cyclical relationships that are suggesting we get a counter turn move here. Good luck, profitable trading. Christian Kerr signing off.